If you're looking to hedge against inflation and protect your wealth, you've likely heard of real estate investment trusts, or REITs. But how exactly can they help you manage your portfolio, especially during uncertain economic times? That's what we're diving into today. REITs can be an excellent tool for those seeking to balance risk and reward, particularly during periods of inflation. The value of physical real estate generally rises with inflation, which means investing in properties, whether directly or indirectly, can help preserve your purchasing power. REITs allow you to invest in real estate without actually owning property. They pool investor money to purchase and manage income-producing real estate, from office buildings to apartment complexes, hotels, and even shopping malls. Now, you might be wondering, how does this help you specifically? For American retirees, REITs can be an appealing option because they offer a way to earn steady income while potentially growing your investment over time, even in high inflationary environments. The income generated from REITs comes primarily from rental payments, which tend to rise with inflation. As prices increase across the economy, so do rents, and as a result, REIT investors often see better returns. But here's the thing. While REITs can offer solid inflation protection, they still come with risks. The stock market heavily influences their value, and the value of your REIT investment can fluctuate. This is where I want to pause for a second and share an option that offers even more stability for those with larger portfolios, especially if you're serious about protecting your wealth in the next 2 weeks. If you have $100K or more in your IRA or 401K, or perhaps even $5 in savings, you might want to consider a gold IRA. The key difference here is that gold IRAs don't fluctuate with the stock market and offer direct protection from inflation, unlike REITs, which can still experience volatility. To learn why thousands of Americans are choosing gold IRAs to secure their savings, click the first link in the description for your free guide. Now, back to REITs. When you invest in them, you're not just diversifying your holdings in the stock market, you're also indirectly benefiting from the performance of the real estate market. But as you can imagine, it's not the same as owning physical property. With our REITs, you don't deal with the headache of property management, but you still benefit from property value appreciation and rental income. However, as I mentioned earlier, the stock market connection means REITs are susceptible to the same risks as stocks, especially during economic downturns. If you're looking for something less volatile with consistent returns, gold IRAs tend to be the top choice among retirees. These retirement accounts are designed to protect your wealth from inflation, as gold has traditionally held its value over time, especially when the dollar weakens. If you're serious about long-term wealth protection and want something more stable than REITs, gold IRAs might be a better fit. They're a perfect solution for those with larger portfolios, especially retirees with over 100K in their IRA or 401K, or those who are sitting on 5M plus in savings. If that's you, I highly recommend checking out the free guide in the description to help you get started. So, if you're looking for ways to hedge against inflation, REITs can play a role in your portfolio, but when it comes to long-term stability and wealth preservation, gold IRAs are hard to beat. You don't need to be bogged down by stock market volatility or inflationary pressures. Protect your wealth now. Make sure to grab your free gold IRA guide and start securing your future today.